What's up traders, Tom here with another video. What if I was to tell you that an entire country other than America was buying Facebook, Apple, Amazon, Microsoft and Google in the billions, and that this nation won't stop anytime soon? Well, find out that and more in this video. Stay tuned. To begin with in this video, we're going to talk about the NASDAQ 100 V-shaped reversal and how incredible it's been, but also what is going on. We'll also be talking about the country that's purchasing all of this stock and whether they're going to keep doing it, why they're doing it, all of those things. And then we'll be talking about my technical analysis of the FAAMG stocks and potential levels in the future, at least in terms of technical analysis, that you could be looking at and drawing up as zones that you might think, it's worthwhile having an alert for. Remember, if you agree with the policy of no FOMO when it comes to investments, then you should subscribe and hit that bell for more content covering the financial markets. Also, I'd like to remind everybody that we have a free public Discord for people to share their trading ideas and just join a general trading community. We understand that trading can sometimes be solitary, so it's best to share and learn from others. So check out the links down below and join the community today. It's already getting large and I can just imagine it's going to get bigger. So here we have the NASDAQ. And if you were telling me in March that the NASDAQ would be at a full V shape, I would have said, probably not. I would have thought it was going to do a U shape. So could I have believed it was going to be around this 8,200 level? Absolutely. But this zone, maybe not. That being said, no one expected the Fed to come in with such a heavy hand, and that's the idea with market trading. You always have to be adaptive to what's going on. But of course, over the long term, if you hold quality, you will do well. So right here, it's going to be hard to find too much value. And we've talked about risk reward on this channel, and we've talked about whether it's worthwhile investing at these levels from a risk reward. And everybody knows my opinion is, I think it's tough to invest in an environment like this where your downside is way more than your upside, at least in my opinion. The other thing that I haven't mentioned too much is that the volatility index, or VIX, is above 30 still. And that is historically very high. In fact, when the VIX is above 30, generally you are seeing some pretty active bearish movement. And we're not currently seeing that, maybe because of the Fed, maybe because of the hope, maybe because who knows. But whenever you see a V-shaped reversal, it usually has a pullback. And we still haven't seen an aggressive pullback which would come back to any significant Fibonacci or significant technical level. So in terms of the NASDAQ, it still makes sense to me that it comes down and it tests at least this 8,800 zone before continuing up. So 8,800 would be like a first target for a pullback, and it would make some sense for the NASDAQ. And this is probably the right time, or around the right time for it to happen. So let's talk about the big buyer of tech stocks. And guess who it is? It's a bank, the Swiss National Bank. So just like the Bank of Japan, the Swiss National Bank loves buying equities. That is one of their favorite things to do. And similar to the Fed, they do it a sneaky way. They print Swiss francs, and then they use those Swiss francs to sell them to US dollars and then use the proceeds to purchase equities. And mostly those equities are tech stocks. They're FAAMGs to be precise. So why do they do this? Well, they do this to devalue their own currency. The thing with the Swiss franc is it is always being considered a safe haven currency. And during times of crisis, the Swiss franc has appreciated, and they do not want that. So this is one of their most active and biggest things that they do. Part of that reason is because they already have negative interest rates. In fact, they've got negative 0.75 interest rates, and it's going to be difficult for them to potentially do any more. In a recent discussion, Thomas Jordan, the Swiss National Bank president, has said we have room to maneuver for both instruments. So that's both concepts. However, when they address the dilemma of what they're going to do, further rate cuts may now be self-defeating. And Jordan said that any policy step-up requests a cost-benefit assessment. So this would mean that the Swiss National Bank would enlarge its balance sheet via interventions, and that they are very willing to buy even more tech stocks should the franc continue to rise. So this means that if you are looking at tech stocks or you're looking at any of the stocks that they hold, potentially look at the Swiss franc, and as it is appreciating, if it does, consider what are they going to be doing? Well, they're going to be adding to their FAAMGs. So how have the Swiss bank consistently been purchasing? Well, they've purchased quite a lot through 14, 15, 16, 17, and they've held it relatively steady around 100 billion. But recently they have increased their positions, in fact by a total of 22% in the FAAMG stocks. So that is Facebook, Apple, Amazon, Microsoft, and Google. They've been purchasing quite a lot of them at a 22% increase during Q1 2020. So in terms of who was purchasing all the tech stocks recently, well, the Swiss National Bank was certainly involved in billions of dollars of transactions. We've already talked about on this channel before the massive FAAMG stock capital. So basically it is over 20% of the S&P 500. And this hasn't happened that many times before. And usually when it has happened, it has been detrimental in terms of those stocks and they have dropped off. But we could be seeing a changing tide in terms of the way that central banks purchase and run policies. And therefore, maybe it becomes the norm that very large companies, especially ones that are underpinned by purchases from central banks, remain at high valuations. And that could be just the new norm. So let's now talk about our technical analysis levels before we cover the next topic. So this is Apple. And Apple, great company. But is Apple high? Well, it's done the V-shape. It effectively looks like the NASDAQ. And it has gone back to its $320 range. And it makes sense that Apple will have some form of pullback in the future. We're not talking crash here, we're just talking pullback. And when you're holding stocks for a long period of time, if you can get slightly better prices, then it makes a difference. So where will Apple go? Well, I think it makes sense that it goes back to a point where it has found previous supports and previous resistances. And that would also be consistent with the 200 moving average. So does 270 make sense? I think it definitely is a level that Apple could easily return to even without a crash and just a standard pullback. Remember that there is a huge amount of retail traders purchasing Apple as well. So while the Swiss National Bank's been getting in there, potentially some of the bigger investors have not been purchasing yet. And there has done so on relatively light volume in terms of this last move. So our thoughts on Apple are pretty much that. Now Microsoft is a little bit different. Again, V-shaped reversal, very similar to the NASDAQ. But the change here is it has what's called a double top pattern on it. So that's where resistance has been hit twice and there is an intervening trough. And if it breaks through that intervening trough, it usually goes the distance of that move. And that distance would push the price down to the kind of previous support here at around 168. However, I think this probably could go even further and go further into around 160 where it would meet again that 200 moving average. Notice I'm saying the 200 moving average because when you look at deeper pullbacks over time, Microsoft has loved generally coming back to around that 200 moving average. And we can see how good that has been as an average kind of buy-in. Is it the lowest point? No. Are you ever going to get the lowest point? Not always, pretty much no. But you are going to be able to get good prices by being consistent and not having FOMO and being patient. What any good investor does. So what are our thoughts on Google? Well, Google actually has been a bit of an underperformer the last couple of years. If we look over here on the left, 2018, it hit 1287. Start of 2018, end of 2017, it was at like 1200. Is it that much higher? Not really. It's been a pretty bad performer. Now with Google, I would have a different type of strategy, and that would be looking at the average kind of pullbacks and where it's gone. Now, has Google been coming out with good figures? The figures are okay, but they haven't been able to invent new stuff recently. And we'll go into that more in other videos. We don't have time today. But 1050 seems to be a zone that has come back to a lot. And what I like to do is I like to target a slightly higher zone than that. And that may not sound crazy, but you want to get the averages. And let's say around 1100 to around 1050 would be the zone. And you would basically target that, set alerts, and wait. You've just got to be patient. Could Google go off into the sun? Sure, it could. But you've got other FAAMG stocks to look at. So our thoughts on Google would be potential pullback into lower ranges makes some sense. And it's about being patient and not having FOMO in all these markets. What about Amazon? Well, Amazon's been a standout star and it's been increasing at a massive rate. In terms of levels, well, it's broken through easily this 2000 now, and it's gone through it a few times. So where previous resistance was found, which is at the 2000, that will now most likely become support. And guess what we're going to see if it does come down to that level? A 200 moving average at around that point. So they're not ideal levels, but 2000 could be a potential zone for Amazon in the future. What about Facebook? Well, Facebook is one that is also like the 200 and it has pulled back even during times that have been good for the rest of the market. So has Facebook's fundamentals really changed? A little bit. They've become better in some areas than they were, let's say, in December of 18 when that also the tech crisis was happening. But just remember with all these tech stocks that they do not benefit from government interventions and in fact, any of these tensions that are going on with China. And if that escalates, expect volatility in these FAAMG stocks. So the 200 moving average would again be the target here, but this time would be higher. So probably around that 180 where previous supports have been found would make technical sense to set alerts and think about those zones. So I want to bring up a question to everybody. And that question is, do you think that the best thing to do right now is to ignore fundamentals to a degree and to actually think about central bank policies, more importantly, the policies of purchasing equities in the future? So if you're thinking about what the Fed has already said they're potentially going to do, what the Swiss National Bank already does, what the Bank of Japan already does, in the future, central banks are going to own shares more so than they even do right now. And the more central banks that engage in these activities, the more buying pressure will be on these particular large stocks. It's another reason why thinking about large stocks that way could be long-term good investments. And I think it's a very interesting point. And I thank everybody in the trading community for putting their comments down below, because that was an idea that was brought up by a gentleman. And I can say that, look, I've been thinking about it as well, but it shows that there's a lot of really smart guys and smart ladies that are coming to this channel and they're thinking about their investments. And when you think and you plan and you have a plan and you instigate it, that's best. So if you were to buy an FAAMG stock, which one would you be looking at in the future? Let us know in the comments down below your favorite one in the future or your favorite one in general. And of course, remember to smash the like button for this video, subscribe, hit that bell, and make sure you receive more videos where we're covering the financial markets. Thanks for watching everybody, and we'll see you in the next video.